you and me, we both are having, let's say, foundation. And your foundation owns 50% shares in a holding company. My foundation owns 50% shares. What will happen to the holding company? As per the previous guidance, it was not eligible for tax transparency because it is owned by no foundations. Now it clarified that even if it is multiple foundation, but as long as 100% ownership is with the foundation or foundations, then the holding company can go for a tax transparency.
Welcome back to this new quick podcast. Today we are going to be having a discussion about the new guide that's been published by Federal Tax Authority on family foundations. This guide was published on 10th of June 2026. So today we have Mr. Firoz with us. He's the CEO of Flyingcolour Tax Department, as well as he's a Federal Tax Authority approved tax agent. Hi Mr. Firoz.
Hello, hi, Mr. Khan. All good, thank you. How are you doing today?
I'm also doing great. So, what about this new guide that has just come by Federal Tax Authority on family foundations?
There was already a guide which was published in the year 2025 regarding family foundation. Now, Federal Tax Authority updated the same guide with few key things we can call it, got changed. That's what we are going to discuss today. In fact, the guide is giving more clarity on certain aspects. In the middle, FTA had post this previous guide, which was in 2025. After that, FTA issued a decision also on family foundation. So what currently Federal Tax Authority have done, they have considered those FTA decision points and made a new guide, which is combined with the old guide and the new decision. So that's what published, as you rightly mentioned, about a couple of days back or on the 10th.
Completely understood. So now in that aspect, what is the joint foundation ownership new changes that have come by?
This is actually one of the key changes. I'll explain to you through an example. Before, it was told that when the corporate tax law came, the foundation can apply for a tax transparency. It's an application. So once that application is done, it has conditions, the major 4 conditions. First condition is that the beneficiary should be natural person of the foundation. And second condition is that the purpose of the foundation should be making the investments and getting benefit out of investment. It can be any investment, real estate investment, portfolio investment, anything. And third condition was the foundation should not get into any active risks. There should be an investment vehicle. And fourth condition is very general. The purpose of setting up foundation should not be corporate tax avoidance. These 4 conditions satisfied, foundation can put an application to the tax authority to treat it as a tax transparent. Now, once the Federal Tax Authority approve the application, foundation itself will not be taxable. What's going to happen? Foundation will become a transparent vehicle, and the beneficiaries of the foundation will be subject to tax. And as we all know, the individuals are not subject to the corporate tax on the income which they are earning from their investment. It can be a personal investment or a real estate investment. To make it even more clear, as of today, if you want a real estate property, will you pay any corporate tax? And if you are having any investment in bonds or shares, will you pay any corporate tax? So the same asset portfolio, if you are putting it under a foundation and submitting an application to treat your foundation as tax transparent, then foundation is not taxable. Then you are taxable if you are the beneficiary. And again, you will not be subject to corporate tax here. So it's this was explained in UAE corporate tax law. Now, post that, there were multi-structures. How the multi-structures work? There is a holding company. A holding company can also hold on the same thing, right? Like, for example, holding company can have real estate, shares, bonds, securities, all these things even a holding company can have. If a holding company owns these assets, initially it was explained that they are going to pay 9% corporate tax on their profit as per the standard tax rules. Further, through a ministerial decision, FTA clarified, or the ministry clarified, that if a holding company who owns such kind of assets for investment purpose, but the holding company is 100% owned by a single foundation, then the holding company can also apply for tax transparency. This was explained through a ministerial decision. The idea was like, someone having a holding structure, they should not impact with this particular decision. So they made it very fair that if you have a holding company, your holding company can also get the tax transparency. Condition was it should be 100% owned and controlled by a single foundation. Now the new update came, which you asked. So the situation was like, if you and me, we both are having, let's say, foundation, and your foundation owns 50% shares in a holding company, and my foundation owns 50% shares. What will happen to the holding company? As per the previous guidance, it was not eligible for tax transparency because it is owned by two foundations. Now it clarified that even if it is multiple foundation, but as long as 100% ownership is with the foundation or foundations, then the holding company can go for a tax transparency. This is what explained about the maritime ownership.
Understood. So there was some clarification regarding LLCs as well. So can you please clarify on that too?
That is again connected with that. If you see, the corporate tax law, Article 1, which is defined what is foundation or what is family foundation. It is told it can be a foundation or a trust or a similar entities. Now the similar entities was not clarified. Through this guide, it given a clear guidance that if an entity is a LLC, that entity cannot become tax transparent unless that entity is owned by a foundation, or to make it more clear, foundations, like as per the new guidance. But that ownership should be 100%. Means like, okay, there is a holding company. The holding company is LLC, right? It can be limited or a holding company. That holding company 80% owned by a foundation, 20% owned by an individual. That particular holding company will not be eligible for the tax transparency. So the concept what is explained in this guide is that LLC itself cannot become tax transparent unless that LLC is owned by a foundation, and LLC also should satisfy this four conditions. That is very important. That LLC is a general trading company. The general trading company can never become tax transparent. The reason that entity is not for the investment purpose, that entity is for the active business purpose. So that is what the clarity on the LLC is.
Also, when I was going through the guide, I understood that once an operating company transfers their assets to a family foundation, there are some changes that are coming by, and there's some clarifications that Federal Tax Authority is actually now showing up. So what are those, if you can just elaborate?
This is a very crucial point actually. Which assets you can transfer? Again, this is all too technical, and I don't want to make it too technical. Let me explain it through an example. If imagine you are shareholder of a holding company, right? And your holding company has, let's say, real estate. Okay. You set up a foundation and you moved your shares of your holding company to a foundation. That means your shares considered as personal investment. When you move your shares, then there is no corporate tax applicability. But on the flip side, instead of moving or selling your shares to foundation, what you are doing, you are selling the property from holding company to the foundation. What is going to happen? Holding company itself is a taxable company, right? So the guidance told that if you are selling asset from one entity to a foundation, make sure that you are booking whatever the transfer of asset or the sale of asset is happening at market value, and whatever the capital gain received by the holding entity, they should be paying, or they will be subject to 9% corporate tax. To make it very simple, if you are setting up a foundation, you move your personal investments. It can be your shares, your real estate, everything. But if you are having an entity, that entity owns the property or assets, do not move the assets from the company to foundation. Instead, move your shares to foundation, shares of the holding company. It's a big tricky situation. That's what it got clarified, that if you are moving asset from holding company to foundation, that transfer should happen at market value, and the holding company may subject to corporate tax as well.
Very well understood. So now my other question is that what is Federal Tax Authority's stance on the family offices that are happening?
This is also clarified. Actually, this was clarified through the FTA decision, which I just explained in the starting of this video. So the FTA decision got clarified like, okay, what is, first let's understand what is family office. This is again coming like, okay, families are having multiple businesses. They are setting up a family foundation, and they put their, real estate, their operating companies, their shares, bonds, everything under the family foundation. They set up a family offices. Family offices, sometimes it can be single family office or multi-family office. What the family office do, they manage the family's business. Now this question was there, if the foundation is a transparent vehicle and the underlying holding companies are also a transparent vehicle, what will happen to the family offices which manages the business? This is again clarified that family offices cannot be part of this tax transparency. Family office will be subject to corporate tax. Now the corporate tax rate can be either 9% or 0%. Why 0%? Some situation, family office can become qualified free zone person. How? Therefore, like if you are, the family office is into wealth management or fund management, which is regulated by the external authority of UAE, which is Securities and Commodities Authority, SCA. Or if the family office is in DIFC, it is regulated by DFSA. Or if the family office is in ADGM, Abu Dhabi Global Market, it is regulated by FSRA. Then the family office may qualify for 0% corporate tax. If they don't qualify for 0% corporate tax, the family office will pay corporate tax on their net profit as per the standard rules. Now, what family office can get as an income? To whom they are serving? They are serving the family business. So the family business should pay them the service charge. Maybe for the entire family, they are maintaining the accounts. The entire families, they require a lot of employees. So they have a family office where their HR is sitting, their CFO is sitting there. Could be multiple situations. So the family office will charge for their service to the foundation or the underlying holding company at market value, and the family office may either pay 9% corporate tax or 0% corporate tax, depends on the situation. What clarification given in this guide is that family office cannot be part of the tax transparency because they are an operating vehicle. So that is what is explained.
And very well explained, Mr. Flows. So I just wanted to understand in further, like if in case a family foundation applies for tax transparency, and as you mentioned, there are some conditions. If in case any such condition gets violated, what is the repercussion of that?
So when a foundation not satisfying the conditions to be treated as tax transparent, which is explained in the corporate tax law, the conditions which we have discussed, any such situation, what is going to happen? The foundation will consider as good as a normal company. Like it's called opaque structure. Opaque is actually the opposite word of transparent. Now, what is going to happen once it become opaque? They are going to file the corporate tax return as good as a company. Now, the problem lies when a foundation who acquire a property or any sort of asset, and that asset must have appreciated, right, over a period of time. And if they violate any condition, post violation, they are selling such assets. What will be the cost price? This is always a question. I'll give an example to you. A foundation bought a building. They bought it in, let's say, in 2024 for 10 million dirhams, and they were transparent until 2030. Example, I'm telling. Now, post 2030, they violated one of the conditions to be treated as transparent. That means they are going to be treated as opaque. Now, in 2031 or 32, they are going to sell this property. Maybe the property value must have appreciated to 30 million. In that case, the cost price which they purchased, 10 million, is going to remain the same. And whatever the sale price, which is 30 million, like on the 30 million, there will be 20 million profit generated, and the 20 million corporate tax will be applicable. So, in short, when someone is having a transparency status, and if they feel that okay, we are going to violate some condition or something is going to be structurally changing, in that situation they need to anticipate this sort of situation and get rid of the assets so that they will not have a huge tax liability in the future. Either they need to continue the satisfying the conditions, or if they are going to violate or they are anticipating such situation, they have to plan it accordingly. They have to remove the assets from the foundation so that when they're selling at the individual capacity, there will be no issue. Such things need to be taken. Now, to answer the question what was like what will happen if the condition is failed, then there's nothing. Being a transparent entity, they are going to submit the annual declaration. They are not going to submit any corporate tax return. But once the condition violated, their tax transparency status will be lost, and they are going to file the corporate tax return as good as a normal company. Like they will have their profit and loss statement, balance sheet, and based on that, they need to calculate the taxable income, make all the tax adjustments, and file the corporate tax. And if they have any profit, obviously they need to pay the taxes as well.
Like in this, a question can come by that if in case a foundation loses their tax transparency, then till how much long they are not able to apply for tax transparency? Is there any point?
Yeah, it's a very good question, and in fact a tricky situation as well. The tax law or the ministration or the tax guide has not addressed this particular point. Now, this is my personal view on that. The tax transparency application, it's an application, right? What is the meaning of an application? Anyone who is eligible to apply, they can apply. If they are not eligible, that particular position will be lost. Example, you can say like tax group registration, then unincorporated partnership application. This is all our application. Now, if they lost at one point of time, and if they are going to satisfy in the next year, they need to submit a fresh application. And again, explaining that, okay, we are satisfying the conditions from starting of this year. Last year, we will file the corporate tax return. And this year, we are not, we are satisfying the condition. And it should be a fresh application, again, subject to the approval from Federal Tax Authority. When it comes to multi-tier structure, means like certain holding companies which are owned by foundation, they also can be treated as tax transparent. Now, there are additional conditions for that. Condition number one, that the holding company or the special purpose vehicle SPV, which is a passive holding company, they also should satisfy the conditions to be transparent. The same conditions of foundation. In foundation, we discussed the four conditions, that the beneficiary condition and the purpose holding of asset, and no business condition, and no corporate tax avoidance condition. These four conditions, even the underlying company also should satisfy. This is the first condition. Second condition, that the holding company must be owned by a foundation or multiple foundations 100%. Now, the difference between the old guide and the new guide is that in the old guide, it was mentioned that the holding company must be owned by a single foundation 100%. Means if let's say you and me are having two foundations, and both of our foundations are jointly owning a holding company, as per the previous guidance, it was not eligible. The holding company was not eligible to be tax transparent. But in the new guide, which is published in the month of June 2026, this issue addressed by Federal Tax Authority, and it is explained that as long as the 100% ownership is with foundation, a single foundation, or multiple foundations, then in that case, even the holding company can be treated as tax transparent. Now, On the beneficiary side, there is a question like, the beneficiary condition. What is the beneficiary condition? Beneficiary condition is that the beneficiaries must be natural persons. Now, if you are seeing the holding company is owned by foundation. It's a corporate body, right? Now, this question was, many professionals, they gave their own opinion, but it was not cleared from the authority side that can the holding company also satisfy the conditions of natural person beneficiary if the foundation has natural person as beneficiary, which is clarified. The authority through this guide clarified that yes, it is possible. If the foundation has natural person as beneficiaries, in that case, even the holding company also satisfying the beneficiary condition. So this is also clarified. So when it comes to multi-step structure, both the condition required to be satisfied plus the beneficiary condition also explained in the new Federal Tax Authority's guide.
Thank you, Mr. Firoz. I think that answers most of the questions that we had. So when it comes to family foundations, I believe this actually gives a lot of clarity about the Federal Tax Authority's new guide that has been published about the family foundations. Family foundations are actually a unique way to manage your wealth and to have tax benefits in UAE. If in case you have any questions about family foundations or about any new updates coming about the taxation, definitely you can reach out to Flyingcolour and we'll be more than happy to assist you further.